As a financial planner, the topic of life insurance frequently comes up. And Bob Dylan sings, "When you ain't got nothing, you ain't got nothing to lose." Although he kind of sings like this. But the opposite is also true. Once you begin to accumulate assets or have others depending on you, you should think about protecting them. No one expects to die young, but it happens. My uncle, who owned his own business and provided for his family, died suddenly from a heart attack in his 40s, leaving my aunt and three cousins. Mortality is never something that's easy to talk about, but the discussion needs to happen. And to be clear, I don't sell life insurance, nor do I make any money if any of our clients go out and buy life insurance. But I do review and recommend life insurance as part of our financial planning process. Risk. The possibility of loss, and this is all about risk management and transferring the risk to a third party for pennies on the dollar. Your goal should be to protect your cash flow, your family, and your overall financial plan. It doesn't matter how careful you think you're being, some things are just out of your control. And some money is money well spent, even if you never make a claim. Now, you can purchase temporary or term insurance, which will remain in force for a set amount of time, or permanent insurance, which comes in various forms and could remain in force as long as you live. Both of these assume you keep paying the required premiums, by the way. Term is the most likely and the most cost effective way for many, but there are cases where a permanent policy may make sense. Personal financial planning. It's personal and it could be different for each person. Some items to think about as you begin to calculate the appropriate amount of coverage for you: your salary and how many more years you anticipate working, annual expenses. Do you have a mortgage? Do you plan on paying for a child's or children's college education? And then look at what you have for available assets now: existing life insurance through your employer, perhaps, or elsewhere, savings, or any other assets. And consult a certified financial planner professional to assess coverage and amounts. A CFP will act in a fiduciary capacity by placing your interests first, as opposed to selling first and then maybe asking you about your goals. You should also review your coverage annually, especially if you've had any sort of life-changing events. And hopefully that helps you start the conversation. If you have a financial planning question I can answer for you, email me, brad.wright@launchfp.com, and I'll help you get to know and protect your money.